Welcome to the Inside Track on Real Estate with the Dekker Team. And I'm Ken Dekker.
And I'm Candace St. Louis Dekker.
Stuck that on the end, eh?
Yeah.
All right, so today's show is all about, a little bit about market update, because that's one of our most commonly asked questions is, how's the market? And also, we're going to talk about how we help you with one of your largest investments, which could be your home.
That's right. Yeah.
Okay.
So in January this year, condos, what happened in that market, Ken?
Well, it's interesting because the number of sales went up.
Great.
Which is positive.
Yeah.
They went up actually 13%. So they went up from 114 last year to this January being 129 sales. Still not a huge number of sales. Prices went down a little bit though.
Okay.
Yeah, 1% down, not huge.
Right.
But that's on top of maybe a couple other slides the last couple of years. And it's basically just inventory. So the average sale price was $247,000 in January for condominiums. And the inventory ended, the end of January, 1,500 properties for sale.
So that means that there's 1,500 properties for sale currently.
Yes.
Available to buyers.
Yes.
In the condo
Condominium.
market.
Just condominiums.
Okay.
Yeah. Now, that is exactly the same as 2015.
Wow.
Now, that may not sound like good news, and yet it is, because the inventory has been increasing of condominiums for the last 7 years.
Yes.
It's been going up and up and up. So this and a couple months at the end of last year is the first time that it's kind of leveled out, settled out.
Right.
So the number of condominiums that are selling plus the number that are coming off is now equaling the number that's coming on the market. So that's a good sign. That's just the start of a tip.
Right.
And yet, if we look at February there were 165 of last year.
Right.
February of last year, 165 units were sold. So if you take the 1,500 and divide it by the 165, that's 9 months of inventory.
Okay.
That's a significant amount of inventory. So that's still in a pretty strong buyer's market. So that's the story on condos.
Great. So if you're a buyer out there that's thinking about purchasing currently or an investor, a condo could be a very great investment at this point.
Yes, it could be. And there's quite a number of condos that are still selling, the stacked condos, the townhouse style condos. Really, I think where the excess inventory is in the apartment style condominiums because of the construction that they've done.
Okay, and what about freehold? Can you expand on that in terms of what happened last year versus this year?
For sure, and freehold is it's the opposite of condos. It's kind of weird. Sales were 472 compared to 512 the year before.
Okay.
So that's a decrease of 8%. So although condo sales went up 13%, freehold sales went down 8%. The difference, though, is also that the average sale price went up 4.6% at 367, basically 387,000 for a freehold home on average. So inventory ended up at 4,050 compared to 4,200. That's a decrease
of inventory.
Yeah.
Which we haven't seen for a while.
Yes.
Is that right?
Well, there was a couple months, again, at the end of last year where inventory dipped or was level. So this is a good sign. This is a very good sign for our market right now. Now, interesting enough, remember I said it was 387,000 was the average sale price?
Yes.
And that was up 4.6%.
Yep.
Well, in January, there were 6 properties that sold over $1 million. In the January of 2015, there were only 3 that sold over $1 million. Okay. So that could have had a slight variation in the average sale price because more expensive homes sold. That also is good news because that's one of the markets that's the hardest hit. Is that when we have too much inventory, it's usually the high end because it takes longer to sell typically. Generally, that's going to build the inventory in that area faster than the other areas. So in February of 2015, there were 675 sales. So if you divide that into the 4,050, it gives you right about 6 months of inventory,
Okay.
which is kind of balanced.
Yeah, that's much better than it has been for a long time.
Yeah, that's pretty good. And we're coming into the season where there's more and more sales are going to happen each month,
That's
which
right.
will actually make it even more balanced.
Great. So it's good news for buyers and it's good news for sellers as well because things are turning.
Yeah, things are
Yeah.
turning. Properties are selling. I know one of our agents just did multiple offers on a property just the other day.
Yep.
And that's just showing again that there's still strong demand to buy. Interest rates are super low. And affordability is great.
Yeah.
So there's still buyers out there. It's just you got to price your property appropriately and get it in show condition.
Great. So what do you have in terms of advice now that we've looked at the market snapshot a little bit? What's your advice towards investors?
Well, I think it's important to know that even if you're just buying your first home or you're buying a home or you're living in a home, that is an investment.
Right.
Although we want to look at it as lifestyle. So it's not like maybe your stocks or something that you're going to look every day and see what the value is. When you buy a home, it's typically a 7-10 year time frame that you might be in that home, especially if it's single family. Sometimes when people buy the starter townhome or condo, it might be in that a shorter time before they can move into a more larger home or a single home. But typically it's around 7 to 10 years. So if you're going to look at it, if I buy it in a year, is it going to be a little bit less or a little bit more? Like, that's not the way you look at that investment. But we did check in with the National Association of Realtors, and they did a survey of homeowners and non-homeowners, people that rented, and they found that on average, homeowners had over $200,000 more in net equity than renters did.
Wow.
Yeah, isn't that significant? Now, a lot of that is in their house because it's kind of forced savings. Every time you make a payment, let's say your mortgage payment is $1,200. Because the interest rates are so low, almost half of it, around $550 every month, is going to principal pay down. So it's like you're putting $500 into the bank in a special savings account every month.
Right.
Right? And so it's almost accidental wealth building
Yeah.
because you have to live somewhere anyways. So it's really phenomenal. The other thing I did the other night with the home buyer workshop, which was really neat, is I did an example of buying a property with 5% down and paying the CMHC insurance fee,
Yep.
or waiting 3 years till you could save up the rest of the money to pay 20% down. And what was interesting, and what I did was I calculated it at a 4% increase
Okay.
each year on this property, and I put in a $300,000 townhome. So
Yeah.
do I buy it with $15,000 down now, or do
Yeah.
I wait 3 years and put $60,000 down? Well, actually, the value of the property had gone up, so you would have to put $67,000 down. So it would take, if you were saving $15,000 a year, it would take you 3.5 years
Right.
to save the money. And so I did the two. So you saved, it was a little over $10,000 for the CMHC fee.
Yeah.
So you saved that fee by waiting, and the property was still escalating in price, plus you had mortgage pay down during those 3 years, because instead of paying rent, you were now paying your own mortgage. And when I calculated it down, the mortgage from the one that just put the 15% down, after 3 years,
The 5% now?
the 5%, sorry, the 15,000.
15,000, yeah.
Yeah, 5%. They were at $272,000 left on their mortgage. And the other one was $270,000 with putting $67,000 down. So only $2,000 difference.
Right.
But the interesting thing is they put in an extra $50,000. Actually, it was just shy of $50,000 extra
To
for the
save
down
the
payment.
$10,000 on CMHC fees.
Yes.
Yeah.
Yeah, so they actually came out negative $50,000.
Wow. And people wouldn't expect to hear that or see
No.
that outcome.
No, it was really a shocking example. So if you'd like to see things like that and understand why it's so wealth building to own your own home, come on out to the Buyer's Workshop on the third Thursday of the month, and you can call 613-860-4663 and register for that, because you do have to register.
You do have to register, and you can bring friends. So if you wanted to learn alongside someone, they can come as well.
Yeah, it makes for a great date night, or even an evening of friends. Come on out as a whole group. I'll even come to a church.
Yeah.
You know, we could do a session for a church on how building wealth through owning your own property or investing in property can make a big difference.
Yeah. You've done that before as well, so that's great.
So sometimes we go in and we're talking with people about selling their property.
Yeah.
And we tell them not to.
That's right. And they're kind of shocked.
Yeah. Have you ever ran into that?
Yeah, multiple times. Sometimes it doesn't always make sense to sell the house. They may think it does, and after you look at their situation and what the house is valued at and what their next plans are, it may be worth staying, not moving, or keeping it as a rental and moving on to that next property.
Oh, that's an interesting step. So keep it as an investment property, and provided they have enough equity in it to pull out to buy their next one, or they have enough saved up to buy the next one.
Yeah.
Very cool. Yeah, as a matter of fact, I had a client once who came and said, we want to sell our townhouse, and we want to take that money and go buy another property. Well, when I sat down with him, he'd only bought it very recently, put 5% down and the CMHC fee, and then to resell, by the time he paid his closing costs and commission to the selling agent, there was nothing left.
Right.
So he came out with zero, and he had the money to go put the down payment on the next one anyways. And so I highly recommended that he keep it as a rental property.
Right.
Bought the other one. Yeah, am I out a little bit of commission? Yeah, but that's not the point.
No.
The point is, how do we help our clients build wealth just like it's our money?
Right. Yep.
If it was our money, what would we do? And so several years later, he decided he wanted out of it, and we did sell it for him. And he made a fairly big chunk of money because the market had gone up now because he waited another 3 years. Plus the tenant had paid down the mortgage for him for 3 years.
Right.
So that's very significant.
If you're just joining us, this is the Inside Track with Ken Dekker and Candace Dekker St. Louis. And we're talking about a market snapshot, right? And also investing in real estate, whether it's your first time purchase, whether you're an investor and you have multiple properties, and just how to build wealth.
Yeah. Yeah, so if you want to hear the part about the market update, we're already done that section. So you'll want to go on to chri.ca and pull up the Inside Track on real estate link, and you'll be able to listen and probably watch the market update. So we were talking about really making decisions or helping our clients make decisions that are the best for them. We treat their house like it's our house. We treat their money like it's our money. There was even a case once where I asked somebody, you get kind of a feeling, a sense when you're in there that they want us to sell their house, but they really don't want to. Right. So with a little more digging, a little more information, I found out that this particular family didn't want to sell their house. Right. And so it was a financial need. He was in the trades and wasn't getting work. And back then, it was a real slowdown in construction. And so what we actually did was help him figure out how to start his own little construction company and do renovations and roofs and things like that. And he was able to keep his house.
That's great.
And as a matter of fact, they still live in it.
Awesome.
Yeah, so that's awesome. So Candace, do you have any stories where you've actually suggested to someone that they not sell their house?
Yeah, I have a few of them. One comes to mind particularly. And it's not fun always to tell someone, you don't have as much equity as you think, and maybe this isn't a wise decision to sell. And so in this particular case, she purchased a condo for her son to do school, and now he's done school, and she's wanting to, sell it and move on. And at this point, it has decreased in value over the last few years. And so I suggested, do you really need to sell? And she goes, no, it would just nice to have that freedom of extra cash again. And I said, it's probably wise to keep it unless you want to take a loss. And after discussing that with her, she decided to continue to rent it and we were keeping a close eye on the market and waiting until it comes back again. She can.
So really what you're saying is real estate's a long-term purchase, right? And sometimes people will buy it for 2-3 years to put a student up while they're going to university, or maybe 4 years. And that's good. It just for this particular market with the condominiums the way it is, it's better if they hold on to it for a little while longer, because inventory is starting to reduce.
Right.
Which means prices will start to come back. Because what will happen is if the freehold continue to rise and the condominium starts going down, it becomes significantly cheaper for someone to buy a condominium than it does to buy a freehold. And so it actually starts to increase the condominium market because they're a better value.
Right.
And so they always come back to an equilibrium. Yeah. So one of the things that a lot of people are coming to the Dekker team for is our experience.
Yeah.
So we have in our little family here, decades of experience, probably in the neighborhood of 50 years.
Yeah.
And although you've been a realtor for how long?
7 years.
Is this 7 years?
Yeah.
Wow. And really, how long have you been around real estate?
I always say since I was 4, really. Since Yetta got into the business, which is also my mom. And I would watch her, and I'd sit at the kitchen table, because back then the phones were tied to the wall, right? By cord.
That's true. We are aging both of ourselves, aren't we? Yes.
Yeah. So I remember sitting at the kitchen table and watching her negotiate and saying, that's really neat. Not that I really wanted to get into real estate at that point as a child. However, on multiple occasions, I watched her negotiate so strongly that she saved more money for her client than they were willing to fight for herself. And sometimes it becomes an emotional kind of roller coaster ride when you're dealing with your largest investment and negotiating back and forth what you're willing to sell a house at or buy a house at. And she was there to say, okay, I can see this is too much for you right now. What is your bottom line? What are you willing to get this at? And they gave her a number, and she said, okay, I will go back on the phone and I'll call you when it's done. And they said, perfect, thanks so much. So she called them back, and I remember her saving them thousands of dollars and listening to her call them back and say, congratulations,
Okay, so what you're telling me is even though they entrusted her with their bottom line price,
yes,
she wasn't going there.
No.
She was protecting their money and getting them better pricing than what they were willing to accept.
That's right. Yeah.
Wow.
Yeah.
Wow. That's confidence in your realtor, right? To tell them, hey, get me this and I'm happy, and they go out and get you better.
Yeah. Yeah.
That's amazing. And so I think you're like that. Are you a chip off the mom's block, I think?
Sometimes, yeah, absolutely.
Yeah, I think you're a lot like that.
Yeah. So there's been times where I've done it myself now in this career, which is an incredible feeling to have that amount of trust entrusted to you, as well as feeling that you succeeded and gave them something they couldn't fight for themselves.
Right. Yeah, I've even had a client call me from Hawaii.
Yeah.
Being transferred back to Ottawa and say, Ken, I think this is the house, go look at it. Yeah. And we went and looked at it, took some pictures, sent it back to them, and they asked me, is it a good house? I said, yes, it is. And they bought it,
Yeah.
and even weren't back for the home inspection, I believe. They just came back to close on the house.
Mm-hmm.
And I met them there and go, well, how do you like your new house?
Yeah.
And
Yeah.
so that takes a great amount of trust
It does.
in your real estate professional. So
Yeah.
awesome.
For sure. And sometimes with military moves like that or transfers, it happens that way. And I had the exact same experience where a military family called me and said, they were past clients. I've looked at properties for them before, and they said, we can't come down this time. You just need to buy it, and we'll see it the day we get the keys. And that's exactly what they did.
Wow.
I picked it. I did the building inspection, and they got there the day of move-in with the trucks and saw it for the first time. So.
Mm-hmm. Mm-hmm. Yeah, it's about. I think it's about going the extra mile. Mm-hmm. I once heard that there are no traffic jams on the extra mile. And I guess that's because not everybody travels there.
Right.
I remember one client saying, we had some struggles with the closing and their mover and whatever. So we met them at the house, and they said, well, there's no hot water. And then we started doing some examination. We thought maybe the tankless hot water tank, I guess that's kind of an oxymoron, isn't it? Tankless hot water tank?
Yeah.
I guess it would be tankless hot water heater. Wasn't working, it wouldn't come on, and we fiddled with it, and then I said, well, hold on a second, let's see, because maybe it doesn't have any gas. So we went, checked the fireplace wasn't working, turned on the furnace didn't work. So I go out to the gas meter, and the gas meter has been disconnected, and there's a lock on it. So I said, oh, now I know why you don't have any hot water. So I was able, to use my cell phone and call the utility company, and it was an oversight on the lawyer's part. They hadn't given the Enbridge Gas the new owner's information so that they could set up the new billing. And so when the old client sold their house and they left, they canceled their service. So Enbridge just came and locked it up.
Yeah.
And so it took a day to fix that, but
that's right.
They got some hot water.
Mm-hmm.
Yeah. So you talked about building wealth through real estate. Mm-hmm. Now there's more than one way. Just buying your house is a way of building wealth. Yep. Now some people, when they buy their first house, they actually buy a duplex.
Yeah.
Or they buy a home. You had one recently that bought a home with the sole purpose she wanted a side entrance to go in that goes into the basement so that she could put an apartment down there.
That's right. Yeah.
Mm-hmm. And so that's one way of building wealth. Another way is to buy an investment property. Mm-hmm. Now we have a fancy-dancy new software program, don't we?
We do. It's called Toprity.
Uh-huh.
Yeah. And it's very helpful in terms of showing the value of a house, what it can give to you, the return into it, before even viewing the house.
Okay, so we can find a property that might be a good investment property.
Yeah.
Whether it's a townhouse or single family or condo or whatever it is, we can put that property in, put in all the expense information, and then our projected growth.
Yeah. Because
we can only go by history. We can't. So we usually underestimate that a little bit. If the market's been going up, on average 4.6% for the last 20 years, let's say, then we'll put in like 4% into it.
Right.
Or we can also set it at 3 or whatever the client wants.
Yep.
We put in vacancy and expenses, and we can put in the cost of the taxes, management if we want. We can put in insurance and all that kind of stuff. And it will show what the value of the property will be in whatever years they want, 5 years, 10 years, 25 years down the road, what the rate of return is each year.
That's right.
Based on that model. How much the rent's going to increase, all kinds of things. It's a phenomenal program.
Yeah.
It's actually written by Brian Dekker, and it's called Toprity, and we have access to it.
Yep.
And Toprity means top property. Best
That's
investment is really what it's about. So we can set people up on that if they're thinking of doing an investment property. Mm-hmm. That's a great way. Coming out to the wealth building workshop.
Yep.
On the third Thursday. Another way to get not your feet wet, but really to start understanding the value of real estate and why most wealth is built in real estate and how people are making 20, 25, 30% rate of returns
Yeah.
on real estate.
Yeah, that's huge.
It's huge. It really is
Where else
huge.
can you do that?
Nah, not too many places.
No.
Not with that kind of stability.
Right.
That security of having a hard asset, right? Mm-hmm. Yeah, it's big. So the other thing I'd like to talk about for a second, Candace.
Yes.
Why is it a fantastic time to move up? Why is it a fantastic time for someone who's going, you know what, I'm a little bit cramped, space is a little tight. What's going in their favor for selling to move into a bigger single or move from a townhouse to a single or that kind of thing? What's to their advantage?
Moving up in this market?
Yeah.
Mean? Yeah, buying the next bigger property?
Right.
Okay, so there's a couple advantages. The biggest one is that the smaller properties right now are selling quicker than the larger ones. So the different price points, the higher you go up, the slower they're selling. Also, the more inventory there is there.
Okay.
So there's more choice as well. And so that's a great advantage to a buyer.
Okay. And in some markets, the higher end ones are actually coming down in price,
That's true.
and the smaller ones are still going up a little bit.
Yeah.
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 So that's fantastic. So we sell houses in all seasons, right?
We do.
We just come through a snowy part of the year,
Yeah.
and you've sold a few homes during that.
Yeah.
Yeah,
Quite a few.
some $800,000, $900,000 homes.
Yeah. Over the last few months, we've sold over 3 larger homes in a small area, which is fantastic in this market. So it can be done any time of the year, and you have more serious buyers in the snowy kind of time frame, and less people just coming to see it.
Right.
So you have some qualified buyers. A lot of them are very qualified and need somewhere to go. So it's a great place to sell. The other thing that's happening is your competition that's not in such a hurry to sell are taking their houses off the market in the winter seasons.
Oh, okay. And you just recently helped a family move into a nice home in Rideau Forest.
Yes.
They haven't moved yet.
No.
They bought a nice one of our properties in Rideau Forest, and you had to sell their property in Barrhaven, I think it
That's
was,
right. Yep.
Yeah.
Yeah.
And they're just tickled pink.
They're thrilled.
And they weren't low end in Barrhaven either.
No. They were around the 450 mark, and it sold within 5 days.
Okay.
Yeah. And we priced it right to get the activity on it, and that they could move forward with the larger purchase.
Awesome. So I got one property I'd like to talk about
Okay, let's
real
hear
quick. It's 37 Flora. It's a heritage type building right downtown. One building off of Bank Street.
Okay.
Could be developed as a brew house, a restaurant, a gymnasium. Could be added stories above and turned into a condominium with parking underneath it. It's 3,000 square feet. Very cute exterior. Like I said, heritage property, so you have to keep the feel and look of the exterior. And that property is up for sale at $1.3 million.
Great.
And what a great location. So thanks for joining us on the Inside Track on Real Estate with the Dekker Team. We're so glad you listened in. If you'd like some information on selling your home in this market, call the experts at 613-860-4663. That's 613-860-4663, and we'd be delighted to assist you.